Hello, good afternoon. You're watching Closing Trades on ET Now. I am Anisha Jain, and if you look at the closing trades today, they are looking like they're favoring the bears because the Nifty is firmly below the mark of 19,800. That hurdle rate is not being able to be broken with a high degree of conviction as far as the market setup is concerned. We're at 19,750, so off the lowest point of the trading session, but from the highs as well, we have given up gains. Broader markets too are on the back foot today, so whether it's the mid-cap or the small-cap indices, they have seen some profit booking from the record high levels that we have been seeing earlier. Bank Nifty, that is one of the biggest underperformers in the trading session today. That index is down almost 400 points. Of course, what put the cat amongst the pigeon was the commentary that we got from the RBI governor as well, when he talked about how the correlation between or the codependence between NBFCs and banking system needs to come down, and the banks need to take high amount of stress testing to ensure that the asset quality remains pristine. So all of that put a bit of spanner to works as far as the banking index is concerned. So we are seeing a bit of a negative reaction. It's of course accentuated more for the public sector entities. So a Union Bank, an Indian Bank, PNB, these are the stocks which are taking it on the chin. Real estate sector is seeing some profit booking today. Godrej Properties is down. Oberoi Realty is also down in the trading session. But what is holding up okay is actually pharma. So that continues to trend at record high levels. And IT2 has managed to bounce back despite the underperformance that we're seeing from KPIT Tech. There are outliers like eClerx, etc., which are doing okay. Persistent is doing well in the trading session, and TCS also is in focus on account of the buyback record date, which has been finalized on November 25th. So ahead of that, we are seeing some buying on dips happening for TCS as well. That was the stocks and news. That was the market setup. But let me bring on board the stocks and news as well as to what's really making it to the list of big buzzers. You have CG Power, which is in focus on account of that foray that they have done in the semiconductor industry, and the entire group companies. Whether it's a Tube Investment, which is the holding company, or Carborundum Universal, which is actually one of the group companies that does make raw material for semiconductor. The entire supply chain is in focus on account of that. It's a $791 million investment, which will be scattered over the next 5 years. So it's still a very sizable investment. Don't know much details in terms of who the equity partnered sector is going to be, but nonetheless that stock is in focus. Separately, we are also watching out for what's happening with other names like IT sector, because KPIT Tech continues to drag its feet. So yesterday, of course, that Kotak Institutional Equity note was out. Fair value is much lower than the current market price, and then Tata Tech IPO is something that is also putting that entire sector in focus, and competition seems to be heating up in that space. New India Assurance, that is an ET Now impact purely because we told you earlier that more motor vehicles will be getting insured, and as a result of that, all of these general insurance companies are also in focus. So after that 7 to 10% rise yesterday, we also have almost 6% gain coming in on New India Assurance today. But Nikunj, if you look at the overall market setup, though there is a lack of momentum, we are not seeing very huge flows at the moment or a very strong rally, but the direction continues to be on the upside.
Sanisha, today if you again look at the intraday graph, not that you had very strong global cues in the morning, but you've popped right back up, which means at lower levels there is a desire to buy, and at higher levels the market is looking for that trigger. So you have to look at two things here. One, the direction. I think the trend is up. Within that, it's a crawl which is evident. 2 good days, 1 bad day. It is not a market what we saw in October or let's say in September, where you were taking 2 steps forward and 1 step back. Now the market is about 1 step forward, then a pause, then 1 step forward, then a pause, then 1 step forward, then a pause. So while the small cap stocks are moving at what could be called at a pace of a rabbit, but the large cap stocks are moving at the pace of a tortoise. What has history told us? Who wins the race? Tortoise. So that is what is happening in the market. You are gradually, slowly moving higher. Small caps are moving at the pace of a rabbit. Now eventually there would be some casualty which will happen here or there. Either stocks will come down or they will get into a hibernation. But it's the tortoise which eventually moves, because directionally the tortoise is moving slowly and gradually. Yeah, the story sunte the. Khargosh ki aur kachwe ki. Just think about it. What I'm saying is wrong or right?
I think it's a good analogy, and it makes sense also that the markets are slowly and gradually moving up higher in the direction. And there are a few casualties also, I think, like what we saw for banking index over the last 1 week or this week itself. We've seen the banking stocks underperform, large cap names underperform, SBI being beaten down again from 580 to 555. So yes, I agree.
And small caps, you can have a casualty any time. But the point is, can the rabbit run another 100 meters? It can. Can it run another 500 meters? It can. I don't know how much more the rabbit can run. But it is a different story altogether.
Yeah, and of course, the other thing to watch out for is the recovery in the last few minutes. Take a look at that. There has been a sudden spike. Of course, it's Infosys, which is also perking up. TCS is doing okay. And then Reliance also is the heavyweight, which is actually supporting the market right now. So it's not a huge contribution. It's an 8-point contribution coming in from Reliance. But we'll take what we get, right? It's really been a nothing kind of market since start. So any move is a welcome move as far as this setup is concerned, because there's a lot of action which has been diverted to the primary market right now. So secondary market is very subdued, but it's Tata Tech IPO, which is already in seen subscription of over almost 4 times, to be honest. Flare has seen decent amount of subscription. It's 1.27x. So there are these companies, and even IREDA for matter, that has seen solid subscription. So a lot of focus has actually gone to the primary market as well. But the market setup, Naresh, what would you call this move that we are seeing in the last 10-15 minutes? Anything to give credence to, or just par for the course?
So it's just swinging in this range, around this 100-point range for the Nifty 19,700 on the lower end, 19,800, 820 on the upper end. So for now, it is just a flip back up, thanks to a little bit of a recovery in Infosys and TCS, and they could recover some more. But overall, once we start sustaining 19,820 to 850 levels, that would be an indication of first indication of a momentum shift. And overall, we are starting to see some bit of action in the heavyweight. So today, now we are seeing a recovery in TCS, Infosys. Reliance is holding on. So now we wait for further confirmation of price action. But overall, the bias gets more positive.
We also have Richard Louis joining us from JM Financial. The conference was really underway, saw quite a bit of response. It's ending today. So let's talk to him as well as to what the feedback was and how was the overall mood and momentum when it comes to that conference as well. Richard, hi. Good to have you on the show. Let's begin by just that. Overall, from the investors' point of view, where do you think the interests lie, and what's the view on India right now?
Okay, so one correction, it is not ending today, it is actually going on tomorrow as well. And it is pretty rare that we have a 3-day conference, right? I mean, we usually have a 2-day event, but this time, because of the interest in India in general, we are having to do it over a 3-day period. So we are actually hosting about 160 to 170 companies this time, and which is why 2 days was not enough to actually fit in so many companies, right? And I think the mood is bullish. I was having lunch with a couple of fund managers, and I think the question really is that where could the downside lie, right? Because that is what everybody is trying to grapple with, and believe it or not, there weren't many convincing answers where the downside could lie. So I think the mood is overall bullish, and I think that mood is obviously helping this kind of an investor conference a lot. To give you an anecdote, there were some people complaining that it took about 5 minutes, for them to be able to get lunch because of the crowd, right? And that is not a bad problem to have. I think the problem of plenty is not as bad as the problem of poverty.
Was it a small room, Richard, by any chance? That's the reason why the queues were long. Did you book a small room?
Not at all. Not at all. No, you guys know Trident, right? I mean, that's a good one, by the way.
Okay. Richard, why is that the economy is looking strong, but the bottom of the pyramid is not growing? And if the bottom of the pyramid will not grow, which is 80% of the population and maybe 20-25% of the total spending, that's called the foundation. If the foundation is shaky, then how can the economy grow per se?
Yeah, so I think, this is really the typical K-shaped recovery that that people have been talking about, right? I think K-shape is something that we've all been talking about in economics, and this is something that as clear as it could get. If you talk to a lot of the businesses and a lot of the corporates who are presenting at the conference, also talked about the inflation pressure that the country has gone through, that the consumers have gone through, and that is what has impacted the lower end of the consumption spectrum, right? I mean, if you look at let's start with COVID, right? I mean, people like you and me, we continued working, we continued to earn, we maybe even saved a lot more on costs because we didn't have to travel. So that is fine, and you double that up with the kind of inflation that we've seen in the last last year and a half. I think that is what has really what has really hit hard on that section of the population. But I think it's getting better. I was again talking to somebody during lunch, and I think he was referring to to the kind of growth that we've seen in two-wheelers, for example, right? And if you look at historical evidence, and we've done this work some years back from what I can recollect, the two-wheeler growth is actually a very good precedent to growth in other parts of the rural economy, right? And including consumer staples. If I remember the coincidence right, I think two-wheelers growth precede consumer staples growth, by about 2 to 3 quarters. It's a bit counterintuitive, but that is what data suggests. So I think we are on a recovery path. I think the mood will incrementally get better as we get into 2024. The one risk really being about how weather pans out, right? Because that's not really under anybody's control. There were some newspaper clipping that I've read about 2024 calendar turning out to be a super El Nino year. So that, I guess, is the risk to the whole narrative. But otherwise, I think we are on pretty good footing.
A lunch to discuss what could go wrong, or lunch to discuss rural patterns. 2 lunches in a day. Wow, man. Richard, 2 lunches in a day?
Yeah, and lunch to also lunch. Yeah, it's not 2 lunches in a day. It's the same lunch with different people, okay. And also lunch to really gauge how many people are there at the conference. So that is 3 of them.
Okay, so for tea and for the drinks and dinner, what are you planning to discuss?
That I will tell you once we've discussed.
Okay. So Richard, let's understand the area of your specialization, the consumption. Now I'm sure everybody says that, okay, look, the India romance is consumption. We like what the economy is doing. We like the per capita binge which is happening. We like the fact that air travel, footfalls, everything is moving in the right direction. But how much of this incremental good news is something what markets are pricing that in? Where do you think there is opportunity in this market where gains or stories or the template is not factored in?
No, I think, given that the growth is so scarce globally, and India is one of the spaces where you have very, very good level of growth, I think that is where the premiumness in terms of people's willingness to pay for is coming, right? If you look at a lot of the stocks, and let's take consumption stocks since you referred to that, right? This is probably one of the most expensive space. And what you've seen happen in recent months and even years is that as long as the growth comes by, and good quality of growth, I don't think people mind paying for that level of growth. And I think that is also an outcome of the fact that growth is pretty scarce in the world. Even if you look at, let's take India for example, right? In whichever companies you see high quality growth, I don't think valuation is per se a concern.
Valuation is not a concern. You talked about how staples follow the two-wheelers. So I'm guessing you are telling your clients to buy into staples as well. But what would be that peaking point for discretionary as well? Because affluent India and that premiumization wave seems to be doing very well. What would tell you that it's nearing peak, if not peaked?
Sorry, I didn't hear the last part. Can you repeat that?
Sure, I just meant to ask you what will be that monitorable on the premiumization wave which will tell you that we are nearing the peak there?
That we are nearing the?
Peak, the top.
Yeah, so, okay, so you guys are aware that we had Mr. Bhaskar Bhatt of Tata Sons at the conference yesterday. I think he's done an interview on this channel yesterday, right? He made a very interesting point regarding premiumization. And he, the point he made is that you need to really distinguish between premiumization and luxury, right? And according to him, and I totally agree with that viewpoint, is that premiumization is going to be a way of life as far as a country like India is concerned, right? Because There is a large working population. Aspiration for a better lifestyle is something that everybody is looking for. So to that extent, I don't think we are in a situation where we are going to be talking about premiumization peaking, because it's going to be a part of everybody's life. And premiumization in this context needs to be differentiated from luxury, because luxury is something which is let's say more discretionary. But as far as premiumization is concerned, you can be premiumizing in every aspect of your life, right? I mean, it depends on the income spectrum that you are in. And so at every level, there is a relative level of premiumization, and I think that will continue. I don't think that is going to peak, so to say, to answer your question.
Just to wrap it up with this good old comparison that okay, China is selling X million cars, India is selling 1/10 of that. China is selling China footfalls are X, India's footfall is X divided by 10. Where do you think that realistic catch up with global averages will happen?
I don't think one should look at it that way, because you have obviously there is this expectation that once we and it depends on categories to categories, whether 2,000 per capita GDP is the tipping point. For some categories it could be 3,000 GDP per capita, and I think as investors the way we need to look at it is in terms of the growth that is palatable to us. And I think the way a lot of businesses are going about doing their business planning is that the endeavor is actually to grow faster than the GDP of the country. And you do have many categories in consumption which are able to do that. And if you're able to do that sustainably and profitably, I think that is where you have the winners.
Thank you very much for joining us. It's so nice to have you. You've already eaten your lunch, so I can say enjoy your evening.
Thank you very
Drinks and
much.
dinner, cocktails.
Thank you very
we
much.
should discuss it, what you've discussed next time, at least on there.
Yeah.
Okay, so that was about the conversation with JM Financials, and of course we'll keep getting you snippets from that conference as well. But just taking a look at the market, because the momentum seems to be okay. 19,800 has been scaled yet again, so we are watching out for that. The banking index too is off the lowest point of the trading session, so a bit of a recovery there. Axis Bank is the one which is actually leading the charge there. That's the only banking name which is holding up in the green, because rest of them are down and out. But since we are talking about the Tata story and the entire Tata group and the kind of retail momentum that we are seeing on the ground, listen into what Bhaskar Bhatt of Tata Sons had to tell us.
Multi-decade opportunity we should not confuse as driven by just demographics and population and so on, which is what I talked about. The multi-decade opportunity is a combination. Our population growth rates will stop. I mean, it's already stopped declining, the growth rate, but the inflection point will come after 10 or 15 years. But still, the value-adding population, which is going to grow to about 760 million by 2060, if I'm not wrong, that keeps growing. So the 21 to 64 age group is going to keep growing, and that is one part of the consumption story. But I spoke about all the enablers which are in place, and there are more and more happening thanks to regulation, thanks to government action, which is the technology stack and so on, as well as corporate action, which is investments and innovation. So the consumer story in India is going to play out over several decades.
Welcome back. Well, one group stocks that have been on fire today is the entire Murugappa group. So whether it's a CG Power on account of that semiconductor foray, Tube Investments, which is its holding company, Carborundum Universal, and even other names like Shanti Gears as well as EID Parry, they're all on fire today. So we are watching out for all of these names as well. But specifically for CG Power, what is the news flow? What's the implication? And how's the street reading the same? We have Lisa joining us with that analysis. Hi, Lisa.
Right, so big news coming in from CG Power. The stock is seen rallying today. Not only that, it also hit an upper circuit and also a record high levels today. And that is because the company announced that it is looking to enter into the semiconductor space. Well, the company that is mostly into transformers, switchgears, motor, that company is delving into the semiconductor space, and they will be competing with the likes of Keynes Technology. Remember last month Keynes Technology had also announced that it will be getting into semiconductor, and for that it had envisaged a capex of around 3,000 crore. Well, coming back to CG Power, for implementing the project, they will be seeking a subsidy from the Ministry of Electronics, and also they will be forming JVs, and they are looking for suitable partnerships with the technology partners as well as the other anchor customers. And for this project, they have envisaged an investment of around $790 million. Now, that is a whopping 6,500 crore in INR terms. For that, the company said that the project will be funded with a mix of debt as well as subsidy, and the equity contribution coming in from the JV partners. And for this, the analysts are saying that it is a positive move, but they have flagged off that it can lead to depressed return ratios. And Spark Capital has said that globally, OSA, that is the outsourced semiconductor business, has been less appealing due to the poor returns that it has offered. It's less than 10% compared to the ROCE of CG Power, which is at around 35%, and this is as per Spark Capital. So yes, on the back of this news, CG Power is surging away in trade, and not only CG Power, the other group companies as well, promoter company Tube Investment is also surging, as well as Carborundum Universal, which makes a material for semiconductor company, which is a part of this group as well. Even that is surging in today's session.
Okay, let me actually toss it to Kunal as well to get his view on the chart checks. Of course, you can't buy CG Power anymore in the cash market. It's locked in circuit. But what about the other group companies, Kunal? And what's the view, let's say, for tomorrow maybe on CG Power?
So, such kind of moves, they generally have more legs. So, even if it's a surprise move for the stock, at least from the next couple of days perspective, we would probably expect that the stock opens up higher and then, continues to trade in a very similar fashion. But then, of course, then comes the compulsion of the stocks, I think, in terms of lowering of circuit filter, which could probably happen maybe 3 days on a trot once the, circuit sort of extends for the stock. But on the other hand, I think, the other stock which was discussed, I think Carborundum, today also the stock has managed to give a breakout as such for itself. Great volumes, of course, for the stock, but more interestingly, the breakout of 100 and the 200 as well as the 50-day moving average for Carborundum. I think that's a very interesting name.
Dabin Mehta, good afternoon. Thank you for joining us. While we spend a lot of time in discussing HDFC Bank, Reliance, Zomato, Paytm, we don't perhaps discuss the Tube Investment, Carborundum, Chola, EID, Parry. I mean, these are the real gems of the South, so to speak.
Yeah, good afternoon, Nikunj. You're absolutely right. These are nice low-profile companies. They just get on with their business and deliver exceptional returns. I think CG Power has been a fantastic multi-bagger stock, and what a fantastic turnaround story it has been. And kudos to Tube Investment for identifying this opportunity and buying into it and turning it around so quickly and creating so much value for its shareholders. So by and large, these are very well-managed companies. They have sound capital management policies, and they generally don't diversify away from their core operations. So, they've been market darlings, although they're not that much in the public in terms of news flow, but nonetheless, they're great performers.
Do you own anything in these stocks? For the longest time, there is one thing which some of these South-based companies have common: great governance, great capital allocation. We don't talk about it, but they've just created so much of wealth that it is mesmerizing.
Yes, absolutely. I think I'll tend to agree with you. Even companies like TVS Motors, Ramco Cement, these are great companies. And if you start adding all the companies out of Bangalore, these software companies, then I think you could certainly say that Southern India is a great source of great value creating companies.
Okay, fair it is. But the other space which is actually making money in the real estate pack is now the NCR focused company. So A lot of these are actually foraying into that region, whether it was Oberoi a few days ago, DLF has been hitting it out of the park, and of course Max Estates, which is a bit of a undiscovered kind of name in this entire pack, has also been doing okay for itself. Not Max Healthcare, Max Estates is the stock which is in real estate, so we should pull up that one. What's your view on specifically, let's say, NCR facing real estate names, Dipan?
So I think DLF is a company worth mentioning over here because the largest player in the NCR region, they created Gurgaon right from complete wilderness and created great amount of value as well. But I'm not that optimistic of companies like Oberoi coming into NCR region. By and large, real estate companies are geographically quite concentrated because they understand the market better, they understand the regulatory mechanism better, they're able to get the permissions and they have the brand over there. So that's an advantage when you're operating in a micro market. And Oberoi's advantage was that it's a Mumbai-based company and it understands the Mumbai market and the Mumbai regulatory environment. Going into NCR is another different game altogether. I don't see so many companies apart from Godrej Properties which have successfully created a pan-India operation worth mentioning. So we'll wait and watch and see how Oberoi's foray into NCR is shaping up. But nonetheless, I think real estate companies are on a song. We are seeing greater volumes being sold, and prices also have been elevated. Every few quarters, they get a decent appreciation in the bookings also, which they are doing. And these companies are focusing more on sales and less on land bank, which means that they're getting maximum return out of their capital. So many positive things going for real estate. In any case, there's a huge shortage of housing, and this entire premiumization trend is very visible in the real estate industry. That also benefits the organized players.
Sure. Naresh, your take on a couple of these big buzzers on charts: eClerk Services, which is higher by 15%, and New India Assurance, which has been higher for 2 consecutive trading sessions.
So eClerx today has seen a large move and could be a case wherein it could top out for the near term after another, say, a couple of sessions more. The stock has already moved after a breakout from 1800 all the way to 2300, 2400 before today's move itself. So looks like a case wherein we could be topping out in the short term time to take some profits off here.
The real estate cycle tends to be a 5 to 7 year cycle because ultimately it's the underlying asset price which demands the price trend. Given that the real estate cycle has started post-COVID, we are about 2-3 years into that cycle. And if this is a 7-8 year cycle, do you think some of these stocks have a long way to go?
Yeah, absolutely. I think the likes of Godrej Properties, Prestige Estates, Macrotech Developers, Oberoi, DLF, they're all, I think, looking at very good returns over the next 3-4 years or so. And this entire shift towards unorganized to organized certainly benefits these companies. And right now, if you study all of these real estate companies, you will see that they are trading at or slight premium to their net asset value. But at every quarter, they're adding new projects. They're going in for joint development projects as well. And most importantly, the valuation, the value at which they're selling the property, the average realization, that also is trending higher quarter after quarter. And at this point of time, even some of the cost escalation which was there in the input costs, steel, cement, those also have stabilized for real estate companies. So I think next few years would be very positive for all these real estate companies. And I would see that depending upon your familiarization, like for example, being in Mumbai, I prefer to buy Oberoi Realty or Macro Developer because I can see their products around, I can see their buildings, I can see what fresh development is taking place, and in a way, I have a pulse on this market. But that's true for somebody staying in Delhi or somebody staying in Bangalore. They may be comfortable buying with local real estate companies. That's perfectly fine because what we are seeing just now is all across India, we are seeing a nice upswing in the real estate industry.
Well, now Titan has hit a market cap of 3 lakh crore. Yes, expensive a year ago, very expensive 3 years ago, but the stock continues to really, make wealth. It's been, Rakesh Jhunwala made Titan famous or Titan made Rakesh Jhunwala famous. Well, that's a debatable thing. But right now, if you are holding on to a stock of Titan, well, every 3 years, it has added 1 lakh crore in terms of market cap in last couple of years. So Vinny's got all the details.
Titan is that one stock that has been glittering, giving good returns as well. And even today it's hit an all-time lifetime high as well. So yes, Titan is the stock that has been glittering in trade. When you look at the trend also that has been shaping up, 2019, around March 2019, we had seen Titan first time hit that 1 lakh crore market cap mark. Then somewhere around in 2021, it managed to reach the 2 lakh mark. So almost around a 18 to 24 months time period between the first 1 lakh crore and then the second time the 2 lakh crore mark that it reached. And again, similar trend almost 2 years, and we are seeing 3 lakh crore mark coming in for Titan. That was yesterday, 21st of November 2023, when we saw Titan touch that 3 lakh crore market cap. Now, there are a lot of factors that actually come into play in terms of what is supporting their growth. That has been the trigger. Jewelry business, which accounts for around 80% of the business and revenue that comes in from there, they're focusing on that. They're adding new stores in the jewelry business. There's an expansion strategy, as well as, Carrot Lane, which forms a part of their jewelry business, Zoya, which comes under the jewelry business as well. All of that also, this is the luxury side. That's a premium side. That has also been doing quite well for the company, and that is what has been pushing the trend in terms of the luxury market trends. That's something that is supporting Titan's growth and is expected to support Titan growth as well. Other than that, watches category, that luxury watch market also has been seeing a very good trend, and that is something that could work out well for Titan, given that they have the watch segment coming in them for themselves as well. So watch segment is also expected to support the growth for the company going forward as well. And companies focusing on capturing that market in other than India as well. They're focusing on expanding tonnage to whether you look at Middle East, Northern America, Asia is where they want to expand more as well to cover the Indian diaspora as well. And that would be a trend which would help them in further growing their exposure other than India as well. They're focusing on other than non-jewelry businesses like ethnic wear and fragrances as well. So yes, maybe a bit expensive when you look at it in terms of valuation, but seems like nothing is stopping Titan in terms of touching the 3 lakh crore market cap, as well as in terms of going forward in terms of the growth outlook seems quite strong as well.
For putting that into perspective, so that 3 lakh crore mark crossed as far as Titan's market capitalization is concerned, and inching high from there on as well. But let's take some BDST ideas from our technical experts. Naresh, the closing trades first. Naresh, what's the closing trade idea?
So looking at Bharat Forge, the stock has made a swing high breakout today and showing some volumes. So out here, looking at it as a short-term target price of 1120 to 1150, keeping a stop loss at 1078.
That's about Bharat Forge, but Kunal, what about you?
So I look at Infosys, and I think after today's move, it clearly gives an indication that the Nifty IT index and specifically the large cap names could make a very strong comeback. So I think Infosys is something which I would pick at current levels.
Infosys is one of the top bets coming in from Kunal, but time now to step into a very short break. Don't go anywhere. When we come back, we track the last 20 minutes of the trading session.
It's only when you look at data you realize that how strong the trend is. And look at Tata Group of companies across the board, IT, FMCG, throw in even companies essentially from the retail space, Titan we've told you, Trent. Now for most of the big Tata Group of companies, and I'm keeping Tata Motors aside because their earnings have been so back-ended that you cannot compare that with other companies because there's a cyclicality in their business. But Titan is trading at a premium to Ethios, Kalyan Jewellers and Cogold. Jeweler or watch company, whichever you want to compare it. Trent is trading at a massive premium to what, let's say, Arvind and what ARBL and others are doing. TCS continues to command a very decent P multiple from last couple of years because of this superior model and where predictability I think is one of the highest. Tata Consumer, even though the ROS is not best in the industry and the return ratios are not the best, yet it is trading almost at par and little bit premium to Dabur now. It's exciting to see that how Tata Group of companies have seen massive P expansion. What is next for some of these stocks? Because it's a wave which in a sense has changed for them.
Yeah, I think what is next is there's no reason for us to assume that they will not continue on the value creation journey. So I think these are great companies, and Tata Group per se enjoys very high reputation and loyalty amongst the investors, domestic as well as global. And any business you see, as you say, if it's a Tata Group company, it will always trade at a premium compared to another company in the similar industry. So I think these are things which they have, strength which they have gained over a long period of time, which will sustain them going ahead as well. And now that we are seeing that the US markets have stabilized and the debt markets over there have also stabilized and inflation seems to be coming under control, all these technology companies, whether it's Tata Technologies, Tata Elxsi, TCS, I think you could expect better prospects from these companies. And I think companies like Trent and Titan really they've been outliers. Other companies per se have done badly in the same group, but they continue to thrive pretty well.
But would you say the same for Tata Tech as well?
Yeah, absolutely. I think it's a no-brainer. You have to apply for the Tata Tech IPO, and maybe you could even consider buying it on listing. It'll always trade at a premium multiple. And what I like best about the company, the last 3-4 quarters, when a lot of the software companies were under stress, this is one company which continued to deliver very decent numbers as well. And the track record is quite phenomenal. And most importantly, if you look at the entire spectrum of software companies, the companies which are engaged in the automobile vertical, there's least amount of cut in tech spending over there. So Tata Elxsi, KPIT, Cummins, Tata Technologies, I think considering the kind of disruption taking place, they can expect very good order flow going ahead as well.
When you're saying the stock IPO price is around 500 bucks, the grey market premium is suggesting at least 300, 350 rupees. You're saying even if it lists at around 800, 850, one should go ahead and buy?
I would think so, and my advice would be that if you already have an allotment, then you could average at listing price. But I mean, let us see what the listing price does take place, and one could look at a few weeks after that once the euphoria settled down, where the stock price trades at. But I think that even if you do add 300 rupees more to it, then also the price to earnings multiple would be in line with some of the other peer group company, be it Tata Elxsi or KPIT, and these two companies, the listed peer group, are trading at a reasonable premium to rest of the software companies purely on account of superior financials. So I think Tata Technologies also will trade at those rich price to earnings multiples.
Since we're talking about Tata Tech, let's listen in what the management had to tell us, because they expect the listing to be quite strong in the coming week, in their own words.
We certainly think, as far as margins are concerned, that there is incremental improvement through operating levers. We are at the moment 50-50 in terms of onshore offshore revenues. We are not an India out company. We are a very balanced onshore offshore company. We represent a global proposition, and we think that there's the opportunity to grow our offshore contribution to the sort of 65-70%.
If you see last 3 years of CAGR of our loan book addition, it is more than 30%. And if you see the sanctions and disbursement, CAGR is 72 and 56%. So which means we have tremendous potential to lend, and we only need to augment the supply side, that is the borrowing side.
Incrementally in this market, now that there is state election and followed by central election, today we are just considering the impact of that, and soon we will start talking about the impact of election cycle. What should a portfolio manager like you will be doing? Would you be raising cash? Would you be buying puts, or would you do nothing? Dipan, the question was for you.
Sorry, see, I don't have the visuals, so I'm not able to see when you are asking me the question. Sorry about that. See, I normally don't like to buy puts per se or trade in the derivatives market. And we are typically long-term investors. So from that point of view, I think anytime there's an opportunity for a good quality listing or a good quality stock, that's when you should then attempt to get into a company and have a longer-term horizon, I would say.
Longer-term horizon is the best way to make money in the Indian markets. That's the view coming in from Dipan. But hold that thought, Dipan. We'll now go across to Sharat to get a sense as to what the dealing room chatter is all about. Sharat, tell us what's making to the news today in the dealing rooms.
Yes, in focus we are having KSB, and what we are hearing from the dealers is there is a strong buying coming in the HNI segment. Of course, this is the cash segment stock, and importantly, the volumes have also picked up almost 4 times its 20-day average, and the stock is hitting its lifetime high levels as well. Strong inquiries are also coming in the oil and gas segment as per the analyst, and the street channel checks also suggest that the company is expecting almost 100 odd pumps, fresh new orders in the FGD projects. Also, apart from this, company stated in its con call that for calendar year 24, they are expecting roughly an order inflow of almost 2,400 to 2,500 crore rupees. Also, in the last couple of quarters, there has been an issue on the operating margins front, but the company has currently implemented their e-sales tool implementation, where they expect the synergies to kick in, especially in the operational efficiency front.
Okay, thanks so much for putting that for us there. Shara, thanks so much for joining us. But in terms of the other stock movers that we are watching out for right now, it's Vardhaman Textiles, which is up 9%. Inox Wind is higher by 7%. Anand Rathi Wealth is also doing okay. But the key underperformers continue to be from the banking sector and the PSU bank specifically. Dipan, what should one do to their bank holdings at the moment? Should one book their profits/losses, sit on them, or just add positions, average out?
No, I think that banks are going to be a great investment as well. And the only problem with the banking sector is over ownership. Because these stocks are so many in number, a lot of the weightages in the individual portfolios is very high. And therefore, we are seeing this underperformance coming in. Investors are chasing some other investment themes because they already have too many banks in their portfolio. That's my assessment. But by and large, I think these are great secular stories. I do not see any visible signs of the NPA cycle turning bad for the banking industry per se. The credit demand remains pretty strong. We spoke about real estate. That's a sector which takes a lot of credit demand. Automobiles are doing well. Capex cycle has picked up. Working capital cycles have improved. So there's great demand for credit. And broadly, I think interest rate, inflation, all those risk factors have been contained. And in fact, we could expect a long period of stable interest rates followed by a declining interest rate scenario, which is very positive for banks. So in my view, from a fundamental basis, banks certainly should do very well. I understand that they have underperformed. That's more due to technical factors and more due to liquidity reasons than actual fundamentals.
Look at the communication from RBI. Go easy on unsecured loans. It's been a mainstay of growth for them. NIMs, because the interest rate cycle has picked up, the NIM expansion will not be there. There really has to be some new buyer who has to come in for banks to go higher because everybody is drowning in banks now. I mean, it's a struggle to find a bear on HDFC Bank. So when the short-term factors are not on your favor, when RBI is raising the hand about a risk in the unsecured loan, which is a high spread business for them, don't you think best of the earnings is behind us?
No, I don't think so. You're right. I agree that there's ownership factor. Everybody's got them in their portfolios, and there are hardly any bears in the banking sector. But these things take time; they play out themselves. I mean, who knows if you have a very strong FI number coming through the next 2 to 3 quarters or so, and that's easily possible because with interest rates settling down abroad, you could have a risk-on trade, and if the currency starts to strengthen, you could see foreign inflows, and the first sector that foreign money will come into will be the banks, especially large cap private sector banks. So just because the stock is overowned, just because its P multiple is gradually compressing, or because foreigners are not buying, these are not reasons to sell a good quality company. I mean, companies like HDFC, Kotak Mahindra Bank, ICICI, they are still growing in terms of their earnings. And even if the stock prices go nowhere for maybe even 1 more year or 2 more years, you will find that they are trading at very attractive price to earnings, price to book multiples. And I know one thing watching the market, that if a stock is really cheap and attractive, somebody will come and buy it. Doesn't matter what the technical factors are, doesn't matter what the liquidity conditions are. So I'm very positive on banks per se. And if an investor has an under allocation to banks in their portfolio, this is a great time to add banking stocks to your desktop holdings as well. And most importantly, I cannot mention the importance of this credit growth which is taking place. And in India also, when you look at the banks and NBFCs, the net interest margin still remains quite healthy. Of course, there's going to be some pressure, but it's not that it's going to collapse.
Since we're talking about the banking sector, let's listen in to what the RBI governor had to say, as well as the SBI chair, because they are talking about the asset quality as well that needs to be monitored closely.
To remain on top of things, banks and NBFCs would be well advised to take certain precautionary measures. In this context, I would like to highlight 4 points. First, while credit growth is accelerating in the current period, banks and NBFCs may take due care to ensure that credit growth at the overall sectoral and subsectoral levels remain sustainable and all forms of exuberance must be avoided. Expansion of the credit portfolio itself and pricing of the same should be in sync with the risks envisaged. Banks and NBFCs also need to further strengthen their asset liability management. They may give greater attention to their liabilities side. In certain cases, we have observed increased reliance on high-cost short-term bulk deposits, while the tenure of the loans, both in retail and corporate loans, is getting elongated. Second, given the increasing importance of non-bank financial companies, that is NBFCs in the financial system, the increasing interconnectedness between banks and non-banks merits close attention. NBFCs are large net borrowers of funds from the financial system, with their exposure from banks being the highest. Banks are also one of the key subscribers to the debentures and commercial papers issued by the NBFCs. NBFCs also maintain borrowing relationships with multiple banks simultaneously. Needless to state that such concentrated linkages may create contagion risk.
Okay, let's get closing comments now from Kunal and from Naresh. And Kunal, we are about to close almost at the highest point of the day, right?
Yeah, Nikunj, on the Nifty.
Yeah, what does that mean?
So I think more than that, Nikunj, it's the recovery from an intraday perspective. So there are 2 points over here. One, of course, is the recovery for the Nifty from the intraday lows, and again the fact that we are closing above 19,800 mark, which I believe is something which was pending out for the index. So this is a confirmation of sorts. And for the bank Nifty also, I think even though it's been the weaker index over the last 3 or 4 days, I was actually looking at the intraday charts, and a major gap has been closed for the bank Nifty. Now in this last 2,000 point plus move for the banking index, there have been 3 occasions when the bank Nifty has done this, and all of those 3 occasions when the gaps have been partially filled, the bank Nifty eventually goes on to make a new swing high for itself. So keeping the lower end of the gap, which is 43,000, I think if that level is not broken on the downside, we could be looking at a possibility of a very big recovery for bank Nifty over the next couple of days.
Fingers crossed for that very big recovery on the bank Nifty. But let's talk about some of the stocks which are likely to open towards the end of the trade, towards the lowest point of the trading session, and that's KEI Industries and RR Cables. And this is something, Nikunj, we were discussing in the morning as well. While the structural story is good in these companies, and KEI, of course, we were talking about how has become from an 8 rupee stock to nearly 3,000 rupee stock, but it's unfair to expect those kind of returns yet again.
No, I mean, 8 rupee becoming 3,000 and 3,000 becoming 3 lakh is not going to happen.
Not possible.
I mean, mathematically, it's not going to happen. But these are businesses which should not trade at consumer valuations, because what typically happens with any power cycle, best of the cycle, worst of the cycle, that you can take a 2-3 year view. After 2-3 year view, the capacity changes, government policy changes, cyclicality kicks in, the sector per se goes through some disruption. That's what I've seen. So what is looking like a secular P multiple which the sector has started commanding should ideally be much lower because of the cyclicality what we've seen. It's not for the first time that we're talking about power shortage, or we're talking about power transition, or we're talking about coal becoming solar or solar becoming wind. Those factors are always at play. But the sheer excitement in this space is just so unparalleled that it just amazes me. Another example I was looking at in the morning was, we looked at KEI, look at APAR, and 10-year change in APAR Industries, and you go to say OMG again. I mean, KEI industry, 10 rupees becoming 3,000. APAR today may be down 5%. But let's again look at the 10-year multiplier here. In APAR, again the same business, transformer oil. There you go. I mean, 85 rupees has become 5,000. Kunal, these are the stocks which have made money.
Absolutely.
100 rupees has become 5,500. And this is not once upon a time. Like 10 years is like just a decade ago. But a decade ago, it has gone from 100 rupees to 5,500, 55x. KEI industry has gone from 10 rupees to 3,000. That is the kind of move some of these sectors have seen. And now to make a case that, okay, they will continue to ramp higher looks difficult to me. Naresh, speechless, right? I mean, 10 rupee, 100 rupees has become 5,500, 10 rupees has become 3,000.
Absolutely. So, and having traded and invested in some of them in the previous cycles, It tells you that long-term investment over multiple cycles is something which can create a lot of wealth. So I remember being invested in KEI Industries at two-digit levels and then making good returns in 2014 to 17. But over the last 3 years, it has been a major surprise. And say nowadays, what happens is today, one thing which we are seeing in the sector is people have started calling them fast-moving industrial goods. So to justify the evaluations, that indicates we might be at the maturity of the sector.
Whether we are at maturity or not, but thank you Dipan, Naresh as well as Kunal for joining us and taking us through the trading session today. All in all, it was a good day for the bulls because we're ending close to the highest point of the trading session. 19,800 have been scaled, at least on a closing basis, even though the market breadth continues to skew in favor of the decline. So the advanced decline ratio is there for you on the screen. There are more stocks declining than advancing. The sector churn has also been quite visible today. IT, which was at the start of the trading session on the back foot, has managed to end as one of the top gainers today. So Persistent, Infosys, Tech Mahindra, LTI Mindtree, these are your top gainers. Similarly, auto started off on the back foot. There was a cut when we started off the trading session, but thanks to the moves on Tube Investments, Bharat Forge, Balkrishna Industries, that index too has managed to end in the green. The high flyers of the earlier trading session, the likes of real estate, metals, they saw some profit booking today, and banks continue to be sluggish in the trading session. Those commentary coming in from SBI, RBI governor did not help the case at all. There was a downtick and IndusInd Bank was down over 2%. PNB, IDFC First and Kotak Mahindra Bank were some of your other top losers, even though Axis Bank managed to end comfortably in the green. From the broader market, CG Power is something that deserves mention. Tube India, E-Clerks as well as Aegis Chemicals were some of these names. But with that, we are wrapping up this edition of the show. Thanks so much for being with us.